In this presentation, we will take a look at multiple choice questions related to governmental accounting, focusing in on those questions and then practicing test-taking skills with them. First question, which would not use an internal service fund? Either A, data processing service for the government, B, purchasing department, C, a public swimming pool, or D, government auto maintenance pool. Let's go through this again using the process of elimination. Which would not use an internal service fund? So as we go through these, we want to think, okay, internal service fund, what does that mean? What kind of fund is that? I would first think about the fund categories. What type of fund category does an internal service fund fall into? There's only three of them, one being the governmental fund, two being the proprietary funds, three being the fiduciary funds. Internal service fund, going to be a proprietary type fund. So we want to think about proprietary funds. What kind of things happen with proprietary funds? They do like services. So there's going to be some type of service type of activity. Internal service usually means that service is internal to the government as opposed to external. In other words, the customers typically being internal as opposed to external customers. So which would not use the internal service fund? Data processing service for the government. So I would assume that the data processing is an internal function of the government in some way. So if it's using an internal service fund, I would think that would be internal thing, and it would then use an internal service fund because it's internal. And then B says the purchasing department. Purchasing, you would think, would be like an internal type thing that goes on, so I would think that would be internal. C says a public swimming pool. Now that if it's a government-run swimming pool, then you would have that, but the customers to it, the beneficiaries of it, the people that may be paying for part of it, external typically, or could be, or many of them are, and therefore you would think that would be possibly a proprietary fund, but it would be maybe an enterprise fund as opposed to an internal service fund. So that's the one we're thinking, but let's take a look at D. It says the government auto maintenance pool. Now, if it's an auto maintenance pool that services only government automobiles, for example, if they issue the government autos and then have their own maintenance pool for them, then that would be an internal as well. So I think of these answers, the best answer would be C, final answer. Which would not use an internal service fund? C, public swimming pool. Next question. Internal service fund bills the general fund, resulting in either A, a debit due from the general fund, B, a debit due to the general fund, C, a debit to accounts receivable, and D, a debit to intercompany receivable. Okay, let's go through this again using the process of elimination. Internal service fund bills the general fund, resulting in what? Now, typically, if you see something with a journal entry, I would normally write out the journal entry. Now, this one, the difficulty isn't really with the journal entries, but the accounts that are used, but you may want to write them out. So we're going to have a billing process, and we're imagining ourselves, we got two funds that are internal to the organization. Internal service fund bills the general fund. I'm assuming then we're considering this transaction from the perspective of the internal service fund, the one doing the billing. And if that's the case, then you would think that we'd have something that would be similar to AR for the debit, right? We're going to have debit, but it's from, it would be AR-like, but it's from someone internal to the government. It's from another government entity. So it's probably not AR, but something like AR. So if I didn't know the name, I'd say, well, it's going to be something due from another part, right? That sounds reasonable. And then the credit, you would think, would be some type of something acting similar to a revenue type of account. Might be called billings or something like that. So, right, that would be the type of journal entry we're in. Now we fill in the names here so that we just get the debits. And you would write the journal entry to make sure you got the debits and credits going the right way. And then A says a debit to due from general fund. Well, that sounds AR kind of type-ish. So I would think that sounds somewhat reasonable. B says, so I'll keep that one. B's for now. B says a debit to the due from the general fund, due to the general fund. Now that's going the wrong way because you would think that would be like a payable. That sounds similar to a payable. We need something similar to a receivable. So that doesn't seem right. And then C says a debit to accounts receivable. Now we said it's accounts receivable like, but it's not actually accounts receivable because it's an internal service fund and the accounts receivable represents kind of things outside of the company usually, or the unit or the government entity. And D says a debit to the intercompany receivable. Now that sounds like it's an intercompany, it's a receivable-like thing, but of these two, the correct term is actually A rather than D, and therefore final answer, internal service fund bills the general fund, resulting in A a debit to due from the general fund. Next question. Not a financial statement of the internal service fund, either A, statement of revenue, expenditures, and changes in fund balance, B, statement of revenue, expenses, and changes in net position, C, statement of net position, or D, statement of cash flows. We'll go through this again using the process of elimination. Not a financial statement of the internal service fund. So this is not a statement of the internal service fund. Now, as we consider these, I think we can narrow this down to basically A and B typically, because A and B look very similar. We're talking about a statement that's similar to like an income type statement, but have different terms, expenditures and expenses, for example. So I would think, given that, it would be between these two items, and I think we could narrow them down then and eliminate the statement of net position. We're going to keep it with C and D, or A and B, and then consider the internal service fund. How can we differentiate between the income statement-like statement? It's going to be whether they're on the accrual basis or modified accrual. We know the internal service fund is a proprietary fund. Proprietary funds are on an accrual basis as opposed to a modified accrual. So of these two statements, which one is going to be an accrual type statement, which one's modified? The accrual statement would use normal terms that we would think of. The modified accrual is going to use some unusual terms. So the normal term would be the expenses as opposed to expenditures. So we would think that this one would be looking more normal. You can also tell between the net position versus the fund balance. Net position is going to be used for the accrual-based funds, and the fund balance for the modified accrual. Therefore, final answer B, final answer is, this one would be there. So the final answer is actually A, because we're looking for the one that is not, and we want to make sure we get that not term. Not a financial statement of the internal service fund. A, statement of revenue, expenditures. That's why it's not, because we would have expenditures under a modified accrual, and we're using the accrual, and changes in fund balance.